Cum-Ex is essentially a dividend arbitrage stock trading scheme. In short, it's alleged that traders created a series of artificial share transactions for investors, which enabled multiple improper claims being made for tax rebates. So, in various countries across Europe, you have double taxation treaties, and so overseas investors were entitled to a refund of dividend withholding tax in shares held in domestic companies. Cum-Ex is essentially a withholding tax refund model which uses share transactions to contrive multiple ownership of shares to facilitate refunds from European tax authorities. Reports have stated that Cum-Ex has cost the German government 10 billion euros in lost revenue. And what we are seeing now is an execution of plans by German and other European authorities to prosecute and convict those who were involved. Well, investigations are gaining momentum. This is not just a European problem. In fact, there are many issues that relate to the UK and, in particular, London. Now, I know there's been a slight delay due to COVID-19, but the FCA, via a Freedom of Information request, disclosed that it is investigating 14 financial institutions and 6 individuals looking into the Cum-Ex matter. In May 2020, the European Banking Authority published a report highlighting a 10-point action plan to enhance the future framework for dividend arbitrage schemes. Now, this clearly put Cum-Ex on the radar for financial institutions and investment firms. It also created the foundation for how future enforcement will actually look like. Next, in July 2020, the German authorities announced that it will be adding additional prosecutors to its team investigating Cum-Ex. Now, this can only be seen as a response to the scale of the probe as the investigation intensifies. I mean, we already know there has been references to some 800 suspects and 100 banks that are involved. Finally, in September, the European Services Markets Authority, or better known as ESMA, published a report following an inquiry made by European Parliament into withholding tax. The report considered the obligations of financial institutions, such as investment firms, to act with integrity. And what's interesting to know is ESMA in its report recommended that the market abuse regulations is amended to investigate unfair practices that threaten the integrity of the financial markets. Anyone that might have been involved needs to put their house in order. There's a lot to be said for being proactive. Any organization that may be under scrutiny has to have a strategy in place to ensure that they understand the extent of its problems, how to proceed, and what legal avenues are open to it. Cum-Ex will undoubtedly have a major impact on the financial services industry, and that's evidenced by the recent ESMA report. We know in March 2020, 2 British investment bankers were convicted in Germany for their involvement in Cum-Ex trading. Corporate liability versus individual liability may be a factor that determines future prosecutions. And it's also important to note that there will be civil proceedings against companies that were involved in Cum-Ex trading, and as such, measures should be put in place for that also.